What's up, YouTube? Welcome back to the Stock Hustle channel with your boy William. Today is Tuesday, January 11th, 2022. As always, to get the formalities out of the way, nothing that is discussed on the channel is financial advice. It is simply financial education, right? Just simply trying to teach people you don't have to slave in those 9 to 5s that we all love to hate. Instead, if you very easily wanted to, you could hustle 24/7 in the stock market and still accomplish all those financial goals you have for yourself, right? As with anything else in life, you're always going to get out whatever you choose to put in. It all starts and ends with you. But now that the formalities are out of the way, excuse me, we can go ahead and do some work today, and that way we can get our hustle on, right? So specifically today we're going to talk about XLE, right? As you guys can see from the chart, this play has been on a massive tear recently. This is Spyder's ETF, specifically the energy sector, right? So the energy ETF, right? Now, people get really confused sometimes because they don't necessarily know what an ETF is, right? Simple way to explain it, an ETF, think of it like a conglomerate or a group of stocks grouped together to form one stock, right? An ETF. That's the simplest basic explanation I can give to you, right? There's a lot more that goes into that, right? Like weighting and how much of what and what's selected to what, right? Specifically, but for Spyder, it's important to know anything related to Spyder ETFs because it's divided up into sectors. A good thing you can use, aside from unusual whales, right? There's a website that Brad Weber on Twitter, I think his handle is Trading Grounds, specifically called out an app you can put on your phone. It's called sectorspyder.com, which is here. I'll leave it in the info down below my video, right? It's just a simple way you can track the Spyder ETF, right, and all the specific sectors, whether communications, consumer discretionary, staples, energy, financials, healthcare, industrials, materials, real estate, technology, and utilities, right? It's important to know what each one of these sectors does because, again, it's just a good way for you to kind of pinpoint what you're going to focus on and something you're going to choose to invest in, right? Specifically, as you guys saw from yesterday's video, if you caught that, I focused on healthcare because, again, UW has sector flow, and on the sector flow page, healthcare was the bright shining star, I guess, out of everything, right? It's the only one that had an increase. Well, today's is energy, right? So you can use this, or you can easily use Unusual Whales sector flow, right? As you can see here. Thank you, by the way, for the person that shouted out. It's difficult to see on a phone, these little small numbers. Definitely can zoom in for you so that you guys can see, but as you guys can see right here, we have 113% increase in the energy flow section, right? So your attention should automatically be on energy plays, right? Now, there's a couple different ways you can go about playing or participating in energy plays, right? You can play, for example, XLE, an ETF, right? I believe the Qs have one, Global X has one, there are various ETFs for energy specifically, right? My favorite is Spyder. Obviously, that's one of the ones I gravitate to, right? For those of you that don't know what is specifically in the XLE ETF and Thinkorswim, you can click on Analyze and then go down to Fundamentals, and it will give you a breakdown. Excuse me. Every time I record, I swear my throat gets dry, and I hate it. You can go into Analyze and then Fundamentals, and you can go in and see what specific holdings are in this specific ETF, right? Like, for example, XOM, you have, I think that's Exxon, yeah. And then you have Chevron, CVX, right? EOG, SLB, right? COP, a name, it's going to bother me now that I don't know the name. But anyways, the point is you can see all the specific tickers that make up this specific ETF and their weightings, right? So what we take away from this page right away, right? Anything XOM or CVX do is going to heavily translate into what ETF or this ETF XLE will do. Why? Because one is weighted 23% of the ETF and the other one is weighted 20%, right? So again, if they take up the biggest piece of the pie, however they move, the ETF will move, right? However, on the positive side, let's say if they have bad days and all the other 20 or 19 different tickers have really good days, this ETF could still perform in a positive manner, right? That's the spirit behind an ETF, right? They don't all have to do good, but as long as the ones that are weighted the most heavily do really well, the ETF will continue to do really well. Well, as you guys can see, this ETF has done really, really well, starting on this jump up since, what is this, December 20th? I'll zoom in for you guys a little bit. See this green candle here? Does this let me zoom in this one? No, it's not gonna let me zoom in this way. I have to zoom in really close. So as you guys can see on December 20th, you have this green candle, essentially a hammer, kind of like a hammer candle, right? But you see the wick on the bottom, right? That wick on the bottom is signifying price rejection of lower price rejection, right? And ever since this day on December 20th, it's been on this nice little massive run, going essentially from 51.97 to where it peaked out today at 63.23, right? If you would have played this at the bottom, that's a pretty nice hefty gain. You would have made some very nice coin in your pocket, right? And that's pretty much what anyone in the stock market wants to do, right? That's the principle of the stock market, right? You buy low, you sell high, right? Perfect example, right? Well, so again, you could easily play XLE and continue riding this wave up, right? Or you can specifically target a play, right? Well, that's what I was trying to show in yesterday's video on Unusual Wells, how to do that, right? So again, we went to the sector flow page, right? So again, sector flow is right here. Click on it. Automatically you see that the energy sector is the one that's giving you attention. Automatically, for me, that triggers me to go to the specific hot chains. Excuse me, wrong page. Hot chains, right? In this hot chains page, right? If you don't want to see every single play out of every single sector, you can categorize by sectors, right? Up here you have a section, click it, hit energy, and now all of a sudden you see all the energy plays in the sector that are alerting, right? Well, XLM, as you see, is the very first one with a very, very nice increase. On the right side, you see which specific strike is alerting with the expiration, or which chain, right? If you go down this list, XLM has alerted specifically, if you look at my notepad, to not have to go all the way down the list, it alerted at 70, 72 multiple times, 71, 75, 74, and 73, just from going through the top half of the list. Obviously, that makes it very, very bullish. Again, if you remember what we just looked at, XLM is 23% weighted of XLE's ETF, which makes it mean if XOM moves up, XLE will technically move up, right? Because it's the biggest weight of the ETF. Not necessarily, right? Again, take it with a grain of salt, right? Because again, there's 19 other plays in that ETF, and if they all really do really bad, they could potentially bring down that ETF. But I think you guys get the point, right? If XOM is doing really well, generally speaking, that ETF will also do really well, right? Well, from here, once I saw that XOM is alerting, automatically, as you guys saw from yesterday's video, that triggered me to going into my next page, or my next section, right? Which specifically is the intraday analysis page, right? I already have XOM preloaded for ExxonMobil because I wanted to see what's going on, right? Again, going into the biggest trades, you see that we do have some bullish trades specifically, right? One for 2.4 million, specifically for January 21st. Now, let me just explain, right? This 2.4 million on a cross trade, excuse me, cross trades, right, means like it's a multi-leg trade, right? So there's multiple trades going into one specific trade, right? And for example, this is an example, right? It could be a bought call at 65 and a sold or a bought put at 65, right? Potentially, right? Based on the sizing, based on the time in which they were bought, right? As you see, they were practically done at the same time for the same size, but just different amounts, right? But again, this is something you can also look at in Unusual to kind of learn and understand fundamentals of options, right? But again, bought call, bullish, bought put, bearish, right? Sold put, bullish, sold call, bearish, right? Very simple concept. It just takes time to remember it, but I promise you, once you do, it'll change the game for you when it comes to options. But usually on this page, what I'm looking for specifically when I come here is I'm looking for alerts close to the strike price where the ticker is to show me a sign of movement, right? Especially if it's short term, right? As I explained in yesterday's video. So for example, January 14th this Friday or January 21st next Friday, right? To see money going into a strike, right? Short term for large amounts, essentially where you see large amounts of volume, where there's already either large amounts of open interest or no open interest on short term, is a sign of bullishness, right? So not always, right? But again, you kind of get the idea, as with anything, right? You have to take things with a grain of salt and kind of try to understand. As I mentioned in yesterday's video, the best traders kind of figure out what the market wants and get ahead of it, right? You're kind of crowd psychology kind of deal, right? Well, you can take that away from following the money, right? So over here in the most active chains, right, what catches my attention right away, which is what I was alluding to as what it alerted in the hot chains, right? It just kind of narrows it down for you, right? You see that XOM is alerting for January 21st at the 70. There's 41,000 volume or open interest on it already, and there's an additional 12,000 volume today, right? So what we look for in a situation like this, right, is tomorrow when we wake up, how much of this 12,000 actually rolled over and is now added on to open interest, right? Additionally, right? I think if I click on this, it pulls a chart. I believe so. No, it's going to take me to a different page. I'll show you in the next page what I mean. But there's a better way to see that visual that unusual wells added, which is so awesome, right? But again, what I'm looking for in this specific page is just either strikes that are well within the price range of where I'm at. So if we're at 71 today, I want to see like a 72, a 73, a 74, a 75, right? Staggered, right? Because that's telling me money sees this ticker is moving up and they potentially feel that it could hit these strikes, which is why they're willing to open these trades, right? And if they are following or placing large amounts of money there, then you want to follow the money, right? You want to go with the grain so that you can take your piece of the pie as well, right? Well, going through XOM, you see that right away, right? Specifically. Now, on the next section, you get the highest open interest increases and the highest open interest decreases. One of the things you might want to note, right, is the dates. So in the increases, yeah, I automatically see that there are some bearish trades, but look at the dates. April 2022, that's not anywhere near where we are now today. You have March 2022, again, same situation. You have a February 4th, which is after the 21st and the 14th, which is what I'm targeting specifically. And then you have one trade for January 14th at the $67 strike on a put, right? But you see that it only increased to 27%. So it's not like we jumped miles, right? And there's only currently 2,700 contracts of open interest established. When you're talking about a comparison of 41,000, for example, or 52,000, or 24,000, again, you get the gist. Like, you're talking tiny, very large, right? There's a big distinction there. Another cool tool that you can use are these bar charts that I like to use, right? You go in here, preset to 100, so you can kind of see the bigger picture, and then you choose your expiration, right? So for example, January 14th, automatically the eye gravitates in open interest, that the one with the most open interest is the $69 strike. But you see that the 70 is getting close, right? The 71 is a ways away, 72 is catching some fire, right? And then you see that it's staggering down. On the volume side, you see what carried the most open interest today. Well, automatically, you see 70 stands out. 71, again, is moving. Again, it's alerting up here as the most active chain, so it's kind of giving you an indication of where the money's going, right? Going out additional strike, it kind of gives you, again, another bigger picture. And then we see, look, for the 21st expiration, 65 stands out, 70, 72.50, the 75, right, and the 80. As you see, there's more money heading towards that bullish side of open interest versus the bearish, right? You can easily see there's way more green than there is red, right? Again, another bullish sign of sentiment. You just take little pieces, right, to kind of put your picture together to get an understanding of when you want to take a trade, right? Max Pain, what price essentially will the most amount of contracts on both the bullish side and the bearish side expire worthless? Specifically, it would be, I believe, 64 or 65. So it kind of gives you an idea where the price could potentially be pinned. If you don't know what price pinning is, please look it up. It's a thing, right? It's a theory that's out there. Just look into it. Again, that's a really, really long conversation, and I don't want to confuse anyone. That's not what I'm about on this channel. It's to help. But latest news, ExxonMobil to buy 49.9% stake in Norwegian biofuels company, right? This was dropped on the 11th. Again, that's a positive catalyst, or something I would interpret for Exxon to be wanting to go into biofuels, trying to be eco-friendly and green, right? It's a good way. It's a good catalyst, right, to give a good push in the ticker. January 7th, market chatter. ExxonMobil rejects union's proposal to end lockout of Texas refinery. Again, that's not necessarily a positive or a negative. It's kind of neutral, right? But then you have some price targets below, which is something I always like to look at, right? You want to see price target increases or price targets in the range of where you currently are trading, right? Specifically, you see that 70 does stands out, 80 stand out, 73 stands out, 71, again, we're close to that already, a 68, a 66, and a 77, or a 65 from a 77, right, for JP Morgan Chase. Again, you kind of get the point, right? Everything is taken with a grain of salt. Chains with the highest open interest, as I already stated above, that January 21st does have the most active chain. Specifically, you see the 65, the 70, the 60, or the 62.50, and then you see down here getting some steam or building some steam with 24,000 contracts, the $75, right? Now today we did have 4,900 of volume, so tomorrow, again, first thing I would want to do if I'm interested in playing a play like this, I would want to see how much of this 4,900 rolled over into that 2,400 open interest. If it all went in, right, and now we're sitting at 28,000 open interest, automatically now that's a confirmation. There is a whale that's interested or believes that this price is capable of being achieved, which is why they were willing to move forward with the trade, right? And then you just kind of, you follow the money, right? Like that's what we do, right? Buy low, sell high. That's the point of the stock market, right? But going into the flow specifically, breaking it down by XOM, I'll have to reset this because I think this was an add-on. This is what I was explaining to you guys earlier, how you can see or follow open interest a little better to track it, right? Put in your ticker, right? Put in our filters. Let's go 25,000 premium because XOM is a pretty big ticker. Bids, bid, ask, calls, puts, all turned on, right? Specifically, well, in unusual whales, when you see, for example, a strike that you are interested in, let's see if we see a 75, like that 75 bot call, right? Say you're interested in that, you want to get a deeper look into it, right? So this one is for June 17th. You can click on it on the hyperlink, and it's going to take you to the page where you literally can see days before, leading up to current, what the open interest has been building like, when the whales have been buying in. For example, on the 5th, you see this 2,400 volume jumped over, and we went from 7,000 to the next day it rolled up to 10,000, right? It's a bullish sign, right? Today we had 1,200 in volume, so tomorrow it'd be interesting to see if this will open up at 14,000. If it does, again, you have a confirmation, right? That's how you kind of paint that picture in your head, right? Specifically. But again, from looking at just the tools at the top, the pillbox, you see the put call ratio, you see a 0.4. Remember, as I stated yesterday, anything below anything 0.5 or below is considered bullish. Anything 0.7 or higher is considered leaning bearish. Now, the one thing you need to remember in that is that number can be skewed in ways, right? Essentially, if let's say a whale comes in and sells 100,000 calls, right? That'll definitely offset that number because selling calls is considered bearish, but it'll lean more to the call side, right? Which again can skew that number. So again, as I stated, everything is taken with a grain of salt when you're formulating your idea before you enter a trade of something you are interested in playing, right? Specifically, and that works vice versa the other way, right? A whale could come in and sell 100,000 puts, and that means that number will be skewed and will be higher weighted, right? It could be a 0.8 or a 0.9 or a 1.1, right? However, selling puts is a bullish sign, right? So just always got to take everything with a grain of salt. The thing I like to look at here, hit that quick view button. Once you hit the quick view, right away it's going to target what you need to pay attention to or what strikes are getting the most attention, the most love, right? So you see the January 14th has 1, 2. That $71 is pretty interesting because we're sitting essentially at 70 right now. But for January 21st, that $75 did catch my attention, and it is one that I'm watching for a potential entry of the trade, right? I had already played XLE last week, and I called it out on Twitter. If you caught it, great. I actually sold that out on Friday. I didn't hold over the weekend. Right now, this market, how choppy it's been, it's not a good idea to hold contracts over weekends unless you are 100% convicted in your play. And if you do, shout out to you. That's how you play in the market, right? But top floor trades, 25,000 premium. You see that we do have some sold calls. Again, that is considered bearish, but again, pay attention to the dates. One is for 2024, March 2022, and then you have 2 in play. One for January 21st, which is not this Friday but next, and then one for January 28th, which is the very last Friday in January this year, right? Or this month, excuse me. Again, one at the 70, one at the 75. Now, depending on how you like to interpret data, I like to think a little bit outside the box, right? The 75 is an open position trade, which is why you see this little bag here where it says BTO, bought to open, or sold to open, right? So it's telling you it's an entry position trade. If you've seen Snorlax's video or Twitch feed, he talks a lot about this, right? He taught me this, or I learned this from him watching him on the Twitch stream, right? When you establish that opening trade position, it kind of gives you heads up of what people are playing into. For someone to sell a call at 75, potentially that could also be interpreted as they feel this ticker could go up to 75, but not higher than 75, right? Which is why you would sell a $75 call, right? Because you think it might have the ability to still run up, but not exceed that, right? Again, it all depends on how you choose to interpret the data, right? Sometimes you got to think a little bit outside the box, not just be one dimensional, right? You got to think from both sides of the trade. This could make for a great put play potentially, depending on how the cards start to roll out tomorrow and the day next, or it could be a good call. Again, we could get a pullback tomorrow or the next day since we've had really up and down days, and then that sets you up for a really good entry, maybe from the high 60s to play a 70 or a 75 call for next Friday's expiration, right? You can always find a winning trade in the stock market, right? You just have to have that positive mentality. You have to be willing to look at both sides of the coin, and you have to, like I said before, think, what does the market want? Energy's been hot, as you can see, right, since December, but way before December, to be honest, right? It's winter. More people tend to use natural gas in the winter, so energy is going to be popular, right? And yeah, you just got to kind of piece things together, right? I hope this video makes sense. I hope these videos and how I try to explain this or walk you guys through this understanding helps in your understanding of what I'm looking at or how I'm thinking or seeing things. Again, I'm not saying that I'm the example of how you should see it, but I hope you take it with a grain of salt, right, and interpret it into your own way, right? But specifically, this is the other thing that I usually pay attention to the most, right? Specific call premium, put premium, right? So automatically, what catches my attention? That January 21st. Why? Because there's $10.5 million on the call side, right? Now, what I want to see of that $10.5 million on the call side, how much of that translated to bullish premium? Well, automatically we see we're sitting at 68% bullish, right, or 68.77% bullish premium, right? Again, that's you see here label, right? And you see that it's $7.8 million of bullish premium sitting on this expiration, right? So as long as that continues to sit there or continue to grow, that's like a confirmation. This is a very bullish expiration, right? As you see on the put side, we only have 3.5 million. We're sitting at 31% bearish, right? Meaning that it's more weighted that it will go up versus weighted it will go down, right? So again, everything is taken with a grain of salt. You see that the week after, that number drops from 10.5 million, it drops off a cliff and it goes down into the 100,000s, right? So again, this would be a short-term swing for next Friday potentially, right? Depending on what the ticker decides to do and what the market shows us, right? Because again, it's not about what you think, it's about what you can understand or interpret from the market of what it's showing you, right? But I hope you guys caught value from this video. If you did, leave it a like. As always, if you guys have questions, leave a comment down below. As always, you can always hit me up on Twitter or IG as well. And until then, guys, I'll catch you in the next one.